The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed it out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everyone. Welcome back to another live stream. There we go. Get that set up. Hold on. Let me just switch over. Make sure I get this. Where is it? I'm setting up a little bit late today. Hold on. Where is it? Okay. Do this and then switch the layout. Hold on. Boom. Wait, got to get rid of this. And there we go. Welcome back, everybody, to another live stream. Happy, what's today? Today's Thursday. Happy Thursday to you. I hope you're all doing well. We've got some interesting stuff. I mean, there is just no shortage of things for us to cover and to discuss in today's videos and live streams. Let's get right into it. Loving the new AI news feed on the Edge Finder. Yeah, me too. I'm excited about this. So this new feature, basically, it summarizes and generates like kind of mini blurbs and articles about what's been going on in markets for you. If you have Edge Finder, it is free. There's no additional charge. If you already have Edge Finder, this is yours free now. It is the new AI news feed feature and is now live. You can select also an asset that you want. So if you I want to know about what's going on with gold, this summarizes based on the latest kind of news articles. It updates a couple times throughout the day to keep you posted on what's going on. So you can read about gold. If you want to kind of summarize Bitcoin, you could do Bitcoin. And then, of course, there's also a bunch of generated articles here based on what's going on across markets. I love it because if you're somebody who's like, I just want a quick pulse check on what took place in markets while I was sleeping or something like that, this is your spot. So AI Newsfeed is up and running live as of today. Well, actually, as of yesterday, but fully live now. I also added some technical stuff to the Edge Finder's AI scanner. We added some simple moving average readings and some volatility readings, which I am thrilled about. I'm an options trader as well as everything else I do, and I like to see a little bit of volatility projections. So for example, like right now, you can see that the last 90 days, the NASDAQ has been moving around 0.68% per day, but in the last 7 days has been trading and moving around 0.84%. Tells you that the recent realized volatility is high compared to recent longer dated history. Just kind of interesting. And also we've got some simple moving averages aligned. So what we can see here is indices are, if we take a look at like Dow Jones or NASDAQ, SP500, they are all, strongly above their moving averages. So it just kind of gives you a little bit more of a technical read in addition to, all the rest of the stuff Edge Finder is using. I'm not going to lie, the market scanner page has quickly become my favorite page on the Edge Finder because from this one page, I can see everything Edge Finder is seeing. It summarizes it. It keeps it super easy. And yeah, so S&P 500 and NASDAQ are slightly lower here this morning, though they're coming off of some of the, this is just letting off the gas here a little bit compared to the monstrosity up move that we've seen in the last week and a half. Really take a look at the NASDAQ from these lows. NASDAQ rallied 9.4%. in just about 20 days or so, or less, 18 days. Pulling back here a little bit. I'm not too worried about my NAS trade. Unless we break support, then I'll just take profits on it. However, there are some things that are taking place here today. Meta, Microsoft, and Google had their earnings reported. They were mixed to not enough for the market's impression. We'll take a look. I'm going to get stopped out of my Meta position because Meta is down here. So I'm going to get not stopped for a loss, stopped for a profit here because I bought this back in back in May. I bought shares of Meta on the breakout here and have just ridden this higher. But it looks like today is the day. Today is the day we're going to take profits, and it's going to close out around an $8,000 profit on Meta. So I am still long as of speaking, but in 25 minutes, again, my stop loss is going to get triggered when the US stock market opens up. So I'm taking profits on Meta, taking some cash off the table, or some profits off the table, I should say, via trailing stop on Meta. I don't own Microsoft or Google. Microsoft was down, it's down around 3% here on the day, and Google also rallying higher here, helping out on the NASDAQ side of things, at least, up 7.65%. S&P 500, NASDAQ, Dow Jones, cooling off here a little bit following yesterday's Fed meeting. In today's video, again, I've got so much to cover. I've got to talk about what's going on with President Xi, President Trump. I've got to talk about earnings, and I've got to talk about the Fed meeting yesterday and what that actually tells us about all markets, dollar, gold, stock market. We're going to be busy today. If you could help me out, if you enjoy my coverage, my content is helpful to you in any way, shape, or form, take 2 seconds. Hit the thumbs up button down below on this stream. It really does help just to support my content. We'll be taking a look at all of it. So starting with indices, S&P 500 on the daily chart still looks constructively bullish in my personal view. Again, going back to our moving averages, they are all aligned. This is also detected within the S&P 500 reading on this the Edge Finder, right? So Edge Finder has the 20-day, 50-day, 100-day, and 200-day moving average all trending up. Volatility has been, it's a little lower than usual, but not by too much. Technical readings, again, straight up bull trend. Seasonality looks really good. Technicals get an A+ when it comes to the S&P 500 because, again, fighting momentum this year has been a losing game. Will that still be the case? Maybe, but momentum means you keep following momentum until it breaks. You don't assume it's going to end. So momentum continues to reign supreme this year. Look at gold, look at stocks, look at Bitcoin. I mean, everything. Momentum has been the king of this market here this year. So I'm going to stick with it as I have for years. I mean, momentum is core to my strategy. Macro and momentum, those are the 2 M's. Economic growth still looks relatively favorable for stocks. Jobs data, not great. Inflation data, however, pretty good. CPI beat expectations. The PPI also beat expectations. Remember, these are looking versus forecast. Edgefinder is monitoring and tracking that stuff here. So S&P 500 looks good, but I actually like Dow Jones and NASDAQ more. So NASDAQ is getting an even stronger score, a +7, bullish reading overall on Edgefinder. And again, when you're in Edgefinder, you can select whatever you want. We've also filtered this by score in descending order. So you have the strongest things up here, and you have the weakest things down here. Gold getting a -1, for example, pound dollar getting a -1. But weakness we constitute as -5 or lower, and strength we call +5 or greater. So like Bitcoin getting a bullish reading. However, you can see Bitcoin, for example, not as clean of a technical signal, considering, you know, some of the moving averages have started to move lower. So again, if we take a look at Bitcoin, you can see the chart is not so clear. However, you still have, you know, we're testing this 200-day moving average. Let's see. Support level plus 200-day moving average. I would generally view this as a more bullish possible environment than not for Bitcoin. And in my personal opinion, this might be a buy the dip opportunity, continuing in the favor of the uptrend. But I still like other things more. So again, I have a lot of stuff to get through here. I'm also looking at oil prices. I've been talking about oil quite a bit here on the channel here recently, but technicals, I'm waiting. I need a little bit more sign here. You can see all these moving averages, 50, 100, 200, still in the bear camp. Yes, we have some short-term momentum, and I still think that that could break out, but I'm looking for that breakout here on the daily. If we can get a move up above 62 on oil prices, I think you may have an opportunity to see a bit of a momentum shift to the upside. So going to continue to watch oil. It is top of mind, but don't love the technicals just yet. So we'll keep an eye on that. But again, score overall still looking good on Edgefinder at this time. Let's keep going. So if I take a look at, let's finish out on the indices. Dow Jones, also bullish. You know, the thing is with me though, with all of the indices, I love them bullish, but I can't touch them up here, right? We've had a really big push. We are due for Not necessarily today, not necessarily this week. It could happen 2 weeks from now, but I think we are due for a little bit of a pullback. Again, we may be seeing that take place now. We may not. We may be back up to the highs by the end of the day. This market is volatile. So, my thought process on the NASDAQ, on the S&P 500, on the Dow Jones is I like these things for pullbacks, right? So if I'm looking at Dow, which is also getting a strong reading within Edgefinder, I like the idea of waiting for a pullback, perhaps to the 50% to 61.8% retracement. I like these areas quite a bit. Even that 38.2% retracement looks pretty good. So if I'm looking at Dow Jones, I'm looking at this 38.2. If price comes down to this area or the 50%, both of these areas look like areas where I could potentially take a stab at long-sided trades, but no fighting this trend for me. I've been pretty much bullish on stocks for most of the year. I had a period of time where I was a little bit more cautious at the highs. Then we had this big drop and everything, and I bought into the NASDAQ and some other areas of the market. I'm long specifically like XLY, for example. So we can see, let's see, where weekly chart. So XLY is a consumer discretionary ETF. These are going to be stocks like Tesla, Nike, Amazon, which have taken a little bit of a beating here in the last few days, but I'm still long this one as well. I'm long the Qs, QQQ. And again, my thought process on the Qs is I will stay with the trade as long as we can hold support, but I wouldn't be shocked. I would not be shocked if we saw a little bit of a drawdown here, a little bit of a pullback from these highs. It's about a 4% pullback that I'd be comfortable holding through. Anything beyond that, we start dipping through those previous highs. I'm going to just take profits and I'll get out of the trade and move on to the next. So that's where I'm at with NASDAQ. But again, let me be very clear. I would not short personally. You do what you want. This is not financial advice ever on my channel. I am just sharing my opinions, but this is not a market you short. When you're talking about a market that is in rally ripperooski into the end of the year mode, historically speaking, that's a losing bet. Doesn't mean it's going to be a losing bet this year for sure, but seasonally, look at stocks, right? We look at data here day in, day out. I am not the end all be all know it all trader. In fact, quite the contrary. What I found is the smarter trader typically acknowledges that they're not the smartest trader. And what I mean by that is that you just look at data, you look at trends, you follow momentum, and you say, look, I don't know more than everyone else. I'm not some brilliant genius contrarian. Contrarian in markets can work great as an investor in my perspective, but contrarian in trading is really hard. And I'm not a contrarian in trading. In trading, I'm momentum, right? Momentum means you follow the trend. You go with momentum. You don't fight it. From a longer term perspective, I'm pretty contrarian. For short term perspective, maybe sentiment wise, I like contrarian moves. Like if everyone freaks out, like on October 10th, where I took that buy in the NASDAQ, everyone freaked out. Sentiment got one-sided, but we were still in the context of an uptrend. So I bought that dip, right? So that's the sort of trades that I like to get in. And they are rare. I don't take, 10 trades a day. I'm a swing trader. So I'm looking for moves like the dollar. I'm still in this dollar move. I can show you UUP. It looks really strong. Dollar continuing to push higher here, though I am looking to exit, looking to take some profits on the dollar index at some point here. Looking for a move back up to this 100 level. We're getting pretty close. And it looks like dollar index wise, looks like you might be breaking through some highs here. Watch how this candle closes. If we get a strong close here following what arguably was a hawkish Fed meeting yesterday, we could get some follow through to the upside. Dollar yen looks incredibly strong. Look at this, breaking through highs on the dollar yen. Dollar CAD looking pretty strong here, finding support around that 50% retracement. Euro dollar moving lower here. Yeah, dollar strength is in the building right now. Look at pound dollar here, back to the lows of this move. Congrats to anybody who's short pound dollar. That is just a liquefying move to the downside. Kiwi dollar here also pushing lower, and the Australian dollar also making a push lower as well. My only positions, I have two positions on the dollar at this time. I am long dollar Swiss franc, which is doing okay. I think I'm back to break even on this, so I've not done amazing. But then long the basket, UUP. I am still long on this one as well, and just kind of sitting through, this move to the upside. So planning on taking some profits off on the dollar at some point here, but for now, just letting momentum go to the upside here. On average, indices bottom out around October 27th. It's a good point. take a look. What we have here is we have historical seasonality going into the end of this year. This has been detected by Edgefinder. This is part of the reason, right? So if I go back to that AI market scanner and we go look at NASDAQ, part of the reason you're getting such a strong score is the current month's 10-year seasonality. And going into November, this does not get more bearish. This gets more bullish. So understand, we are talking about NASDAQ firing on all cylinders. You have AI hype, you have rate cuts, you have Trump and Xi essentially seemingly putting in a deal when it comes to US-China trade dynamics. Look, does it make anyone else nervous that everyone is watching this market melt up? Makes me nervous, right? I always am a little bit cautious when you have stocks trading at all-time highs. I get that. But I also know that historically speaking, all-time highs tend to yield more all-time highs. Momentum is a thing. We don't fight it, we ride it. And again, when I say ride it, you ride a wave until the wave kicks you off, right? So if we come down here, we start failing, if momentum is no longer our ally, that's where I'm out of the trade, right? I'll just take profits. But I think you could get shallow dips and continued rips for the remainder of 2025. We'll see if I'm right about that. And if I'm dead wrong, if I'm completely wrong and the NASDAQ crashes into year's end, then I'm just going to take profits on positions and reset. So that's my game plan for most of the remainder of 2025. So yeah, good to see you, Bashi. Thanks for being here. So NASDAQ down 0.5%, Dow Jones down 0.36. The Russell trade also has been a little bit disappointing in the sense that, I had this gain come into the account. We tapped recent highs and have now pulled back, but I wouldn't call this a lower high just yet. So sometimes people are like, that's a lower high, maybe you should sell. Well, for me, what I would say with this is a lower high is only a lower high when you have a lower low. So if I'm looking at, let's get my RSI definition out, which I like to use. If this is my recent higher low, right? If that's my recent higher low, I'm really not super bearish on price action unless you took out these lows. Now, from a shorter term perspective, we found support here around the 2450 level, let's call it. I'd like to see this area hold. And if it doesn't, then I'm just going to cut the trade there and I'm going to reset and look for better opportunities. Do you not see gaps closing on the US indices? I mean, Donald, you might. That's, again, notice where my stop loss is. There is this big gap. We could fill that. But again, my initial reaction based on my analysis is, even if we do fill that gap, like, first of all, I'm not a day trader or a scalper, so I'm not going to try and like get cute and trade like, oh yeah, I think we're going to go down there. And then we're going to go, like, for me, I'm just looking at the higher time frames. We have momentum on the daily chart, small positions and chill, like relax. I'm saying, okay, big picture, we're still trending up. If we come back and fill those gaps, so be it. That's perfectly fine. Maybe we don't though. Like, understand, gaps do not have to get filled quickly. That could get filled today. It could get filled 3 weeks from now. It could get filled 1 year from now. And it also could get filled never. Gaps do not have to fill. That is made up. That is absolutely made up. If you don't believe me, look it up, because there are many gaps in the S&P 500 over the years that have never been filled. So please be careful. That assumption, no assumption is safe in trading. No assumption. Markets can drop 10% in a day. They can drop 20% in a day. It's happened. Gaps can go unfilled forever. Once you understand the market can do whatever it wants, and if you make any sort of dangerous certainties or assumptions about what markets will do, you're toast. Markets can do whatever they want. We are just here as traders to ride it, and that's it. CFDs are not allowed in the US. That's correct. What's the benefit of trading QQQ? Yeah, so I just have limited options in the US. I could trade futures, but because I tend to hold things and can hold things for longer stretches of time, ETFs are ideal for me. They have very low trading costs and holding costs, and they're very liquid. So yeah, I have a NASDAQ position through the ETF QQQ. This trade completely was helped with the Edgefinder data that we were getting. Again, sentiment at the time, you can actually see sentiment is working against us now with the NASDAQ trade. Crowd sentiment has gone bullish. However, when I took this trade, we had an even stronger reading. We had a +9, I think. Part of the reason was because sentiment at the time that I took the trade was super bearish, right? Crowd got petrified on that Friday when Trump did all the posts, and it created a wonderful entry opportunity in favor of contrarian short-term kind of momentum, or not momentum, but long-term momentum still favoring upside, but short-term panic. Those are just sweet spot entries for me, right? Sharp dips, sharp pullbacks in an uptrend are like my favorite setup. Just my favorite setup. Wasn't gap trading profitable according to university studies? I'm not sure. I would encourage you to look that up. Not exactly sure. I'm just not really a day trader. So I have not, not to say you can't make money in day trading, but I also think it is worth understanding the reality that if you look at the reported data in, finance land, the longer people tend to hold positions, the more likely they make money. That's not an opinion. That is a fact. Brokerages report this. The longer people, like if you hold something for 10 years, most of the time you make money. If you hold something for 1 year, you most of the time make money. If you hold something for 10 minutes, those types of traders typically lose money. So longer stretches of time tend to favor traders and investors. Like swing traders and position traders have a long, like if you hold something for on average 1 week, 2 weeks, a month, historically speaking, or data wise, those people tend to make more money on average. It doesn't mean you can't make money as a day trader, but the odds are heavily stacked. Like day trading and scalping are absolutely trading on hardest possible mode. Scalping is like the hardest thing. Not saying you cannot make money doing it. But again, if you're like, I'm still not yet profitable, I'm trying to figure this out, look into swing trading, look into position trading. The stats back it completely compared to scalping the 1 minute chart. And that's what we do on this channel. We talk about the macro. We talk about momentum on higher time frames. We pay attention to what's going on, and we trade around that momentum. Gold, for example, people have been asking me a lot, am I still bullish on gold? What are my thought process on gold? Gold right now, if I pull it up in my system, is very much in the neutral camp. Momentum on the higher time frames, we've still got the 50-day, we've still got the 100-day, we've got the 200-day. We lost the 20-day. 20-day has been lost. So bears are, at least in the short run, right? The 4-hour and daily chart trend has switched to bearish. Seasonally, still positive. Net positions from the institutional side of things, institutions are still bullish gold, but we are also in the blind on some of the COT data. That data has not yet been reported due to the government shutdown. Sentiment is neutral according to the put to call ratio. Economic data has been strong out of the US, which favors stronger US dollar, weaker gold. So yeah, gold is not a trade for me at this time. From a pure technical perspective, we have a lot of volatility in this chart right now compared to 90-day average. We're talking about higher volatility than usual. And we have most of the moving averages favoring upside in terms of long-term momentum, right? So just looking at our moving averages, there it is visualized, right? You can see we've lost that 20-day moving average. We've still got the 100, the 200, and the 50. But yeah, price, to me, this is in no man's land. We've lost that clear momentum, and the fundamentals just do not favor, at least U.S. economic macro data does not favor a very obvious bull trend for gold at this time for me. And I've been saying that for a little while. So I didn't call a top by any means. I paused on buying the gold rally for quite some time here. So I've missed a little bit of that extra juice in terms of my short-term trading. Long-term, I have a bunch of long positions on precious metals. I'm a long-term, pretty much perma bull when it comes to precious metals. But in terms of trading, I've just been very neutral on gold and remain neutral. But guys, we'll watch this data as new data comes in. This is what we do on the channel. And with the help of Edgefinder is we are watching, like if GDP data starts coming in soft, if PMI data starts coming in soft, the Edgefinder is going to pick it up and the tune is going to change on gold. Maybe we get bullish. Maybe we get bearish. Rarely, but possible within gold. So yeah, we'll see what happens with gold next. I currently, like I said, have a neutral reading, but from a longer term perspective, technicals still remain bullish. I think we could get further downside in the short term. I'll tell you that because again, I think short term momentum favors downside just in the short run, right? So if I'm looking at 4-hour chart, 4-hour chart to me looks like you could continue to see swings to the upside get faded, and maybe we're headed back to test that 50 and 100-day moving average. That's my personal opinion. I'm not short gold and have no willingness to do that, but I am bullish on the dollar and continuing to ride that side of things, which lends towards a weaker move in the price of gold. And by the way, just a side note, people are like, Nick, why are you turning bearish on gold? Like I said, I'm a permabull on gold in the long term. I would love to see gold down at $3,500 an ounce because I could buy some for the long term. Would love to see it. Like I'd love to see downtrend for a little bit longer and get some cheaper prices on precious metals. So we'll see. Anyways, that's that. Someone said oil prices or oil score dropped. Yeah, so oil's dropping here a little bit in score. Again, this is updating throughout the day. So it's monitoring all this data, and as things change, Edgefinder is changing its projections. By the way, I should mention something. We're here with about 4 minutes to go here before I got to pass on the stream to our next host. Let me make a quick public service announcement. We are doing a Halloween sale, and it is a huge discount that we are kicking off today. So this past week, we did a free period where everyone could try the Edgefinder, and a lot of people have already taken advantage of the discount that we just dropped this morning. So I'm going to share it with you here if you are interested. So currently, Edgefinder is, just so you know, it's a one-time payment to get access. I am a big fan of having a product that you don't have to pay every month for, and it doesn't just eat away at your trading capital. I recognize that that's kind of a frustrating background feeling, and I don't like that concept for myself when I buy stuff. I like to pay once for things and have it done. That being said, we know also that Edgefinder is a pretty costly product. It's not a cheap product. It's a remarkable tool that we've invested tons of, resources, time, energy, and money into building over the years. Edgefinder is currently 45% off. We are currently doing a huge discount. This is the lowest discount that we offer in the entire year. So we are currently doing this, and we just kicked it off. Our Halloween sale or our spooky sale. You can see my guy here behind me. If you are interested in picking up a copy of the Edgefinder, here is some information. If you are interested in getting that 45% off discount as a stream viewer right now, click this link that's just been dropped in the chat. This will connect you to a real person on my staff who can get you set up with the spooky low prices that we are doing right now. Let me also just, there we go. You can also chat here by scanning the QR code if that is easier. But let me just reiterate this. If you're somebody who cares about understanding macro or momentum, and you want to have the tools that we use in the videos and streams and everything, I highly recommend you take advantage of this discount because it is the lowest that we do all year long. And Edgefinder is worth every penny. If I didn't truly believe that, I would not sell it. And I use it in all my content because I genuinely use it to help improve my trading. With the help of Edgefinder, I can scan a ton of sentiment data. I can look at the commitment of traders data to track what institutions are doing, right? So I can see institutional data through the commitment of traders report. I can look at seasonality to understand historical patterns and trends and how that might impact the charts that I care about. I also can look at economic heat maps. So I can see at a glance, this tool is doing the work for me in terms of macro fundamental analysis so that I don't have to, do all of that by hand. I did that many years ago. I used to do that by hand, and it was a painstakingly slow and tedious and monotonous process to hand grab this data by navigating all over the internet to find it. Not only for US, but we also have the European Union. We have the UK's data. We have Japanese data. We have Canada, Australia, New Zealand, Switzerland, and China's data. We have a ton of stuff here in this library. We also just added a new feature, which is, of course, the new AI-generated news summary. If you care about macro and you want to keep up with geopolitics, with what's happening in the news, but keeping it summarized and unbiased, our tool has built specifically with the help of AI to give you an unbiased view as best as possible of what is happening objectively in markets and how it could impact your charts. If you are somebody who has thought about getting the Edgefinder in the past, here is your chance to get it for the lowest price of the year. 45% off. It is a one-time payment. And the last thing I'll say is, even with the 45% off, we can, if you need it, we can arrange something where you can do a payment plan instead if you need to break it up into, let's say, 2 payments. That is something that we offer. Speak directly to our support staff using the link in the chat or on the screen below me. The chat with us QR code will take you to where you can speak directly to a member of our team, and they can set you up. Don't miss it. Again, there is your special offer there. Limited time only. Let's get back into things here. I think we have, let me just double check our timeline here. Let's see, we've got, let me just get, I'm just checking to see who's up next on the stream. Looks like we have James. I just want to double check that we have the link sent to them. So I'm just going to send this. Okay. There we go. Okay, so S&P 500 still pulling back here a little bit. Take a look at the 1-hour chart. You do have, here's that whipsaw from yesterday's price action. Back and forth here. We'll see what happens. We might be taking out the lows here, but we'll see. We're pretty close. S&P 500 on the hourly chart. NASDAQ also towards the low end of yesterday's range. The Russell also there, but bouncing at least for now. Dollar index. Let's see if we can make this last push on the dollar index. I would not be surprised if we do get up there in the next week or so. US oil, again, still watching that one for a setup. Gold, no setups for me. Silver, no setups for me. Bitcoin, I don't love the lack of momentum in terms of like if I'm trading this is not a very trader friendly chart for me in terms of like momentum in the short run. But in the long run, we do still have on Bitcoin a +5 score, but you can see like all of our moving averages have sort of filtered bearish here. So probably a pause for me. Let's see, what else do we have? Chinese stocks, CAD Swiss. How's CAD Swiss doing? I've been stuck in a CAD Swiss trade for a long time. I have this entry, but I also have this prior entry. I mean, this is a very long-term trade for me, and it's tiny positions. But we talked a little bit about currencies yesterday. Just currencies have just not been my thing recently. They've also just been a small portion of the trading that I've been doing because I just find that there's so much more out there to watch. We've got indices ripping here this year. We've got gold and silver making big moves, commodities. Although I am interested in watching this Japanese yen move. You have a lot of dollar yen, euro yen. These things are really trending well to the upside. Bitcoin is ruining lives. Probably only if you're leveraged. Bitcoin shouldn't be ruining your life. If your position sizes are big, anything can ruin your life. If you're leveraged massively on oil prices, on gold, on silver, I mean, everyone, I'm just curious really quick, comment if you have one. What's a chart that you have PTSD from? I'll tell you one for me was Euro Aussie back in 2020. I had a short position on in Euro Aussie that just went absolutely against me and was no fun. During the outbreak of the pandemic, I was stuck on the short side, and thank goodness I had small size because I still survived this, but it was my peak FX drawdown I've ever had, being short Euro Aussie, and ultimately made profit on it just by having small enough positions to survive the move. But gosh, was it painful in between. Like, it was shocking how much that currency pair could move in a short period of time. Everyone has some sort of chart that they have some sort of like a past breakup with. I feel like for a lot of people, you always hear people who are like, oh, I swore off gold because gold screwed me over too many times, right? Gold has taken some prisoners, if you will. Mine is oil. I held way too long. Yeah. Tricky. Everybody's got one. Oil prices are also probably a disaster, or oil moves are probably a disaster. I feel like for a lot of options traders too. Options traders love oil because of the high implied volatility. If you're selling options, like you can get some really good premiums selling like USO strangles or, trading, I don't know, futures contracts on CL, right? Like you can sell for premium and do really well for a long time. The problem is when you get into like a 2022 where you get like a war outbreak or something like Russia, Ukraine, the volatility expansion can be so dramatic, which is crazy. So oil prices to me, though, I still think on a bigger picture, I think they have potential to bottom out and to move higher. That is a longer term idea that I have in markets. But from a shorter term trading perspective, the momentum is still down, but we seem to want to break out here. So I'm long on oil if and only if. I'm not long currently, but I would be interested in longs if we had a breakout to the upside in oil prices. I also I said this earlier, but I liked oil score being pretty positive within Edgefinder. Economic data looks pretty good out of the US. Jobs data, not so good. So I'd love to see some strong jobs data, which would just make me really bullish on oil. And could also help to be the catalyst for that breakout that I'm talking about, would be if we got a strong NFP report next time we get it. Pound New Zealand, start of the pandemic. Yeah, that pair moves like crazy. Trickiest is oil. Oil is difficult. It is not easy to trade. I mean, nothing is. There's no easy chart to trade, to be honest. Sometimes people ask that, like, hey, Nick, what's the easiest chart to trade? Buy and hold the S&P 500 with no leverage for 20 years, and you'll possibly make a profit. That's the easiest chart to trade. But even then, it's not a guarantee. Nothing is. It's hard. Trading is really hard. What do you think about futures, Nick? Futures are great. Low cost way of trading in and out of markets if you are very active, especially if you're in the US. It's a wonderful option. UK 100 thoughts? Yeah, let's look at that. I'm curious what's happening with UK 100. It's getting a bullish reading here. Had some good inflation data recently out of the UK. We could look at that. We should look at UK economic heat map here. So the UK economic heat map, we've had manufacturing PMIs. We beat expectations pretty well here. Wow. This was October 24th data. I haven't been caught up on this. Services PMI also beat expectations. Retail sales better than expected. So some economic growth here that looks a little bit promising. And also CPI was better than expected. That's good for the stock market, right? In the UK. So getting some bullish signals here. Yeah, I don't hate it. I don't hate that. I like the idea of UK 100 to the upside, the FTSE. So if I'm looking at this on pullbacks, right? If I'm drawing in some support levels, let's get my fibs out. Yeah, like a 50% retracement looks good for upside, in my personal opinion. Gold is definitely not the easiest. Yeah, gold is anything that has higher volatility is probably harder, just because people make, like, assuming that the biggest problem most people have in trading is they look at this NASDAQ S&P just moved lower. The biggest problem most people have in trading is they put on too much size. And if you put on too much size in something that is already very volatile, that is really, really tricky. Because again, that's where people get into trouble. S&P 500 is back to this gap open area. Let's see. You either get, obviously this is a very obvious statement, but either we fill this gap here or we bounce from the gap opening point. We'll see. My guess is you get a bounce, but I'm not taking any trades on the S&P as I'm already long NASDAQ. But we could backfill these gaps. A little bit of consolidation post Fed meeting, post some of the earnings report that were not particularly great for some of the mega techs. They weren't bad. They just weren't phenomenal. And this market is demanding perfection right now. So yeah, I mean, I think you could fill those gaps. And if those gaps get filled, maybe that's an opportunity to reload. That's my personal opinion. I'm already very much invested in terms of stocks and indices and my long positions on stuff I'm already very kind of already in. I'm not leveraged by any means. I don't use any leverage in my trading. I avoid it like the plague, because you can really, no matter how smart you think you are, you can always be wrong in markets. And so leverage to me makes things just really hard. You want to talk about the hardest way to trade consistently over the long term? Trade high volatile assets with leverage. You're almost certain to blow up eventually. That's the mistake so many traders make. So the smartest thing that I ever learned about markets is that the best thing you can do is size down your trades and backtest. It truly is hidden in plain sight. But it's hidden in plain sight because nobody wants to hear that. When you're talking about trading, when you're getting into trading, I know what it's like. I've been doing this for a long time now, so sometimes I'm kind of blinded by my years in this thing. But I know what it's like when you first start. You're like, I want trading to be this thing where I can make some extra money, and I want to actually make some money in trading. I get it. Everybody does. But what's hidden in plain sight is that slow and steady wins in the end. Most people blow up along the way. We talk about this frequently on the channel. The smartest thing you can do right now, if you want to be a good trader someday, or if you are already a good trader, you probably resonate with this. Small size is your ally. Big size is your enemy. Because when you're right with big size, you feel like a hero. But when you're wrong, you're depressed. If that's you, if you have mental swings like that, your trade size is way too big. It's your body telling you that. It is your mind and your body. If you physically feel down when you're down in money, or up when you're up in money, your position size is too big. Take a hard look at what you're doing. That's the truth. I'm telling you, I've been doing this almost 10 years. That's the truth. If you have swings mentally that are really aggressive, your size is too big. Your trades are too big. Period. Like, I have a NAS trade long, and it's a good size, but my account size has also, it's gotten bigger over the years. I'll say that. It's still not an aggressive size on the account that I'm trading. Now, it's a big position size, I guess, relative to people who have new accounts or they're new to this stuff, but it's still not like my Q's trade. If this comes all the way back and stops me out for a profit, if we trail stops and I gave back a bunch of this, who cares? On to the next. On to the next. Brad says, I'm hearing you. I'm telling you, man, I have so much love for this game. I love trading and investing in financial markets so much. And when I share my content, I would run out of steam on what I do. I create many videos and topics and streams, and I love this stuff. But what I can tell you is that when I share something like that, I'm not telling you that, like, it doesn't help. If you trust me, I get it. People are hesitant about trusting anyone on social media, as you should be. But it doesn't benefit me to tell you that getting rich quick in trading is a lie and you're going to blow yourself up and hurt yourself. Because it doesn't help me sell more stuff, right? It actually might be a deterrent for some people. Like, if I say, look, you could trade for the next 5 years and get really good at this stuff and still only be making small amounts of money from the markets, that's probably the truth. Now, 10 years from now, if you keep going, you could make a ton of money. But nobody wants to hear 10 years from now. People want to hear like 2 weeks from now. It doesn't serve me to tell you this stuff, but I don't really care, because I think that who I attract as a customer, and there is always a customer in mind when I'm making my content, is somebody who is serious about this stuff. I don't want to sell to people who are short-term oriented. They just want to make money quick. I don't want to sell to those customers. They're the worst to work with. You know who's a great customer to work with? People who love learning about markets. They are dedicated to stuff like I am. Those are great customers to work with. Like, a lot of the Edgefinder customers that we have are people who are like super interested in macro, and suggesting new features for the Edgefinder and trying to better understand, like, how does CPI impact the charts that I watch? How does GDP numbers impact the things? How do I compare two currencies and their economies? understanding what is the economic surprise meter. Those are the customers I want to attract. So I don't really care to sell the dream because those are not the customers that I even want. I want customers. Like, transparently, my YouTube channel is a funnel for selling you something. I will never hide that. But I want you to be the customer that I want to work with, not a get rich quick junkie, trader who is going to be out the door in 3 months' time. I don't want to work with those people. And that's not who we attract at A1 Trading. We tend to attract a more experienced trading customer. And that's what we want. If that is you, if you're like, yeah, I want to get access to the Edge Finder, and you are that trader, if you see yourself trading in 5 years from now, you're the type of customer we want. We want to sell you our tools if you are that type of person. If you're going to be gone in 3 months, we'll still take your purchase if you want to, but we'd much prefer to work with traders who are, willing to be here for the long term. Edge Finder is a one-time payment. It is currently 45% off. It's our biggest discount that we do all year long. It's a Halloween sale that we're doing right now. If you want some information about it, scan the QR code that is right below me. If you're somebody, I've been watching people tell me all the time, they're like, I watch the show all the time. I've been waiting for a discount like this. We do it every year. It is our Black Friday / Halloween discount. It's the biggest discount. So if you're a regular, this is it. This is the chance to get access to not just Edge Finder, but anything in our store. You can get 45% off. It's a store-wide discount. If you are that customer, if you want to work with us, if you want to purchase some stuff that I think is genuinely worth every penny, if you are a macro aspiring trader, get yourself a copy of the Edge Finder. Stop wasting money just throwing money around in the markets. Start trading with some macro. Start understanding the trades that you're taking, understanding the markets that you're watching. So here's a chance to pick up a copy of Edge Finder for 45% off. Send us a direct message right here. It's just been dropped in the chat. That'll connect you to a member of my team who can get you some more information if you want to ask a few questions about Edge Finder, if you need a payment plan, if you need to know details about the sale event and when it's ending, all that good stuff. Just send us a direct message. Take a second to do that so that you don't miss out on our lowest prices of the year. If it's easier, like I said, you can also just scan the QR code that is below my camera. Should I still buy it if I'm joining the military soon? Truthfully, yes. Like, you should 100% buy it, because over time, the Edge Finder gets more expensive. We build more things. We add more costs to our overhead to building things. We add new features. The Edge Finder goes up in price over time. It's a one-time price. So if you get it now, and instead of 2 years from now or a year from now or whatever, it will likely be more expensive then. So you might as well pick it up and keep it and keep studying. And even when you're, I don't know what being in the military entails in terms of your availability, but I mean, we have people in the military who use our stuff. Who knows? Maybe they're on the front lines using Edge Finder. You never really know. But yes, you 100%. If you are anybody who sees yourself getting it in the future, you shouldn't wait, because if you wait, the price could be higher by the time you get there. Going long in the Edge Finder, Joshua, me too, my friend. I've been long Edge Finder since 2021. Let's see if the NASDAQ bounces. You're talking about a retest of yesterday's or 2 days ago low. I'm going to go out on a whim and say this. I am still so bullish on this market. How does the payment plan work? Send us a message. We will get you hooked up with that payment plan if you need some information. So why am I still so bullish on this market? Well, because actually I got to check this really quick, because I want to check this before I look at it. Okay. So I'm glad I looked at this. Investor sentiment survey officially, for the first time in 3 weeks, just flipped to a slight bullish preference from the crowd. So the crowd's getting bullish. Now let me finish my thought process. Why am I still bullish on this market? Because there's still a ton of bears. The bearishness, we're talking about markets at all-time highs. This market is so hated It is so hated by so many. Why? Well, because institutions, you know what institutions did in April? They sold. Institutions sold. You know who bought the dip? Retail. Retail's been killing it this year, which is against the trend. But retail bought the dip in April, and the institutions did not. I can show you this. Usually institutions are on the right side of things. Not this time. Take a look at this. If we go take a look at, let's look at SPX. And when we look at SPX, we're working with some older data, but that's okay because we're looking at historical studies. Let's go back to, where are we? April. So if we look at April, you can see that there was a preference by institutions to actually be short rather than long on the futures contracts traded by non-commercials, that's your hedge funds and banks. We had peak bearishness in June and July of this year. Oof. Can I get an oof in the chat? Can I get an oof in the chat? Institutions literally sold the bottom this year. Like, that is such an oof. That makes me incredibly bullish. You know why? Institutions do not want to go to holiday parties in a few weeks and tell their clients, I sold the bottom and had a big oof. Think about it. Think about this for a second. Let's say you manage a bunch of rich people's money, okay? And you have a holiday party coming up, and you made a fatal error this year. When the stock market, when crypto, when stocks, when everything was down earlier this year, you made the assumption stocks are going to keep crashing. A lot of people did. And if you did, I'm not teasing you. This is a reality. This is a real force, and why I think the market can continue to push higher. If you are part of the oof crowd, you do not want to go into those holiday parties and your clients, these millionaires and billionaires who you work for, who you manage money for. I mean, that's what a lot of these hedge funds do, right? Like, I'm putting you in this position. You go to those clients and you say, and they ask you, hey, so-and-so, how'd we do this year? How'd our portfolio do? It was a great year in the stock market. How'd we do? Right? Because genuinely, there are some millionaires and billionaires who don't care. Like, they don't really pay attention to the stuff. They just have so much money sitting around and they have it managed by a fund. You, as a portfolio manager, you cannot go up to them and say, oof. What? You cannot go up to a portfolio. You can't go up to your client and say, oof, that's what we did this year. The market had a remarkable recovery, shot through the highs, did incredible. And what did you do? You sold the low and you got bearish at the low? Absolutely not. So what are institutions likely, not certainly, but likely to do, in my opinion? They are likely to chase. They are likely to say, I cannot do that. I cannot go to my clients and say, I've got to fess up that I sold the bottom of the stock market. We can't be oofing around in the chat, okay? Oof in the chat, okay? We can't oof in the chat, all right? So that is why I think there is pressure on this market to keep going higher. Now, can something change right after I said that? Could 1 hour from now Trump say something crazy that changes the dynamic? Sure, but we're not living in crystal ball land. We're living in right now. What do we have in front of us? We have an environment where hedge funds lost this year and they don't want to go to those holiday parties and say, hey, I'm a loser. They want to buy every little dip there is so that they can say, no, yeah, we're in stocks, right? That's the alternative. The alternative is you go and you say, oof, or you say, yeah, we're in stocks. We're in stocks. We did okay this year, right? Tough year, but we did okay. That's what they're going to do. That's, in my opinion, why dips will be bought aggressively for the remainder of 2025. Now, could this age like milk 3 weeks from now? Yep. Let me sandbag really quick, which is an expression used by hedge fund managers to cushion their mistakes. Like, maybe I'm wrong. And if I'm wrong, right, here's the thing. I'm a retail trader. I'm not a hedge fund manager. I can make my own decisions and I don't manage anyone else's money, and none of this is financial advice. I'm just a guy on YouTube with opinions who trades. I can be nimble. If the market has a shocker, right? If something really changes, let's say we start getting data and it comes in and it's horrible, right? I can stop out and I can reevaluate. And I can also say, I'm going to keep my positions on because I think portfolio managers have to chase this market. So the thing is, I'm not leveraged. So even though I have these opinions, please understand, this is where people go wrong. I've been in the game for almost 10 years. Where people go wrong is they leverage this idea. They go crazy on the leverage and chasing and let other people do that. In my opinion, no leverage. That's silly stuff. Leverage is your enemy. Small positions are your ally. I'm long, cautiously, trailing stops. Can we get higher lows? Trail further, right? That's how I'm going to play this. Dollar index, I still think has upside. Trade deals seem to be coming in between US and major trade partners. Mexico seems to be postured for a trade deal with the US. We'll see. China and US seem to be aligning a deal. Again, this is just not a market you fight. It's just not a market I fight. You do what you want, but this year has favored momentum, and I think it continues to do so. 2026, let's reset. Let's take a closer look. But yeah. Thanks, Nick, for the free Edge Finder. I longed the USD CAD and through COT data. Yes, dollar CAD did okay. We had a nice bounce back on dollar CAD. Look at that. Rebound. Very nice. Yeah. So like I said, guys, we're going to be passing over the stream here in just a second to Marco, who's going to be taking over and taking a look at some charts with you guys. Before we do that, let me just remind you one last time, we just kicked it off. It's our spooky discount. Our Halloween sale discount is currently 45% off. Again, I recognize that it is a sales pitch and everyone is afraid of spending any kind of money online. But I do my best in my videos to show you authenticity and transparency. I show you my accounts. I show you my ups. I show you my downs, my wins, my losses, through the help of macro fundamental analysis and studying momentum, studying crowd sentiment, fundamental analysis, sentiment analysis, technical analysis, and using software to string the three together. I've been able to generate some really nice returns in the markets. I can't guarantee you're going to make money in the markets. My tool is not a crystal ball. It's not a magic money system. But what we've built has helped me to screen the markets at an elite level compared to where I was years ago. If you also see the value in studying fundamental analysis, momentum, and crowd sentiment, if you want to track this stuff, if you want to keep an eye on the economies of the world, if you want to look at sentiment, like we just got done looking at the AAII investor sentiment survey. You can also look at the put to call ratio. By the way, a little bit of frothiness. I think we may be working off this high amount of call volume that we see in the S&P 500, right? We can track the put to call ratio to see what options flow is looking like. We can look at the AAII sentiment, right? All of this stuff is built into the Edge Finder and yours to grab at the lowest price that we do all year. Here it is. Scan the QR code below me or click this link that's just been dropped in the chat or in the description to speak directly to our support team who can give you information about the sale that we are running. It is available for a very limited time. If you would also like to just explore the website, head over to, if you want access to our VIP group, you can also get access there. See all the trades that I'm taking, every detail, backed by verified, brokerage results. If this is something that you're interested in, do not hesitate to explore today because it is, again, the lowest price that we will be doing. The Halloween sale is available through tomorrow. 45% off. Take advantage. Everything in our store is discounted for a limited time. Okay, with that said, let me go ahead and switch things over to our next show host. Of course, it is Marco from Marco's Trading Journey. So stay tuned. He'll be in just after this quick break. Spooky season is here, and with it, we're doing a huge Halloween sale. Simply scan the QR code and you'll be connected to a real person on our support staff who can get you set up with a copy of the Edge Finder, our VIP memberships, the stock box, and more for 45% off. It's the biggest discount we do all year long, so do not miss your chance to pick up a copy of the Edge Finder at 45% off. And if you find QR codes too scary, then feel free to use the link in the description down below instead to explore our website or to speak directly to a member of our support team. Don't miss your chance to get some spooky savings on the Edge Finder and our other products, and happy Halloween.
Hello, everyone. Welcome to another stream. I hope everyone is doing well. Lots of developments in the markets. Unfortunately, I couldn't stream for the last 2 days because I was in Germany. So I was looking for a new car. A car popped up in Germany. I had to quickly go jump on a plane and buy it so that I don't miss the good deal. Thankfully, I'm back. Thankfully, the trip went well. I'm looking for ball out. Where is ball out? We have a friendly bet on USD JPY. He was calling the top, let's say. He was very bearish on the DXY, very bearish on the USD JPY. So if anyone knows where ball out is, he's here. Okay. So far, UJ has been going as planned. Now, I'm not saying that to brag. I just got lucky here. So trading is all about probabilities. Sometimes you lose, sometimes you win. Again, 50% win rate is still a great thing if you have a positive reward to risk. So this could have easily went lower. I mean, it still can reverse because I do have a take profit set, but we can still drop. So it's nothing to brag about. It's just a friendly competition between me and ball out. But yeah, so ball out is still calling the top. I don't think a top is coming yet. I think, especially for USD JPY, there is sort of an intervention level possibility at 157, 158, 159. I've been researching the yen. I've been researching interventions. We had a big intervention in 2024. I was actually trading this. I actually had some nice sell setups, and I made most of my profits in July of 2024. So that was an intervention from the Bank of Japan. I'm kind of worried it's going to happen again. So I'm being really, really careful. Okay, so I'm being really, really careful. I have a take profit set. If you're in the A1 Discord, then this was a trade signal and you got all of the levels, the entry, the stop loss, the take profit right when it happened. It hasn't hit a take profit yet. As I mentioned, it can still drop and not hit a take profit, but it has been going pretty well. So if you want to join A1 Trading Discord, get these signals, get these trade ideas, you can do so. And you can do that with my discount, which is MARKO. And this month, I think we're running a very, very big discount. So make sure to check it out. Make sure to join so that we can trade together and learn from each other. I mean, the Discord is amazing. I learn a new thing every single week from the members because they have a lot of insights. They have a lot of other sources for fundamental news that they're watching, reading, seeing. They're talking to other traders as well. So you can exchange ideas. You can create new trade ideas, and it can be very, very good. Yeah, so 45% off. You have it in the chat. Code Marco, and I think this is one of the biggest sales of the year. So make sure to take advantage. I'm going to run through my trades. UJ is the first one. USD CAD is the second one. Now, I have been taken out of the initial position right here. Okay, so I got taken out of the initial position. That is a loss. I'm still in the second position. I still like dollar longs. I still like the dollar as a currency. I still hate the CAD. I mean, I don't hate the CAD, but the fundamentals overall, long-term fundamentals are looking very, very bearish. So I want to sell the CAD. Right now, the second trade is around break-even. So it's not doing well, but I do think long-term it should work out, right? So there's no guarantee, but there is a very good chance, which is all that we need as traders. We just need a high chance, high probability of one outcome compared to a different outcome. So I think there is a high chance, there is a high probability that USD CAD goes up until the end of 2025. Why do I think so? Well, we can look at the Edge Finder. Now, I look at the Edge Finder a bit differently than Nick. So I look at both the short term and the long term. It all depends on how long my trade idea is. Is it a short-term trade idea or is it a long-term trade idea? If it's a short-term trade idea, I focus on the economic heat maps. Okay, I focus on this. And short-term, Canada is very, very strong. 75% of data is coming out better than expected. Okay, so short-term, very strong, but long-term, which this trade is long-term, this is not a short-term trade. What is a short-term trade? USD yen. That's a short-term position. That's a position that I'm going to hold for the next, I would say, 1 to 2 weeks. Maybe even manually close it because I'm betting on the dollar appreciation at the end of the month for corporate buying of US dollars. Big US companies, they sell stuff all over the world. They collect foreign currency. They need to buy US dollars. They usually do it at the end of the month. It's a known phenomenon. You can ask ChatGPT to give you the results of the last 7 days of the month. Does the DXY go up or does it go down? And you will see the probabilities are that the DXY goes up in the last 7 days of the month. Okay, so that's kind of a seasonality occurrence. USD CAD is more of a long-term idea. So long-term data, I'm looking at GDP. So all over the place, not so great. I'm looking at the unemployment, which is really, really bad. See, 7.1% on an uptrend means it's rising, and I'm looking at the CPI. So CAD 2.4%, rising above target, above 2%, that's a problem. That's called a stagflation scenario. Okay, stagflation is never bullish for the currency. Do you want to be in Canada with a 7.1% unemployment rate, with above target CPI, with GDP all over the place, with housing prices falling? You can check the data. I think it's going to be in the Edge Finder soon. You can check housing prices data for Canada. They are clearly falling. Okay, housing prices are clearly falling. So Canada's economy, not so great. Relative to other economies, it is the weakest. So I wanna buy USD CAD. I want to sell the CAD. Give me just 1 second to go grab a glass of water, and I'll be back. Okay, I'm back. So, and then the last one is EuroCAD. EuroCAD is around, it's in drawdown, I'm not gonna lie. So this trade has not been working out very well, but it is another long-term position. Again, very important to distinguish between short-term positions and long-term positions. So short-term, I would say 1 to 2 weeks. Long-term, 1 to 2 to 3 months. So with short-term positions, I have a tighter stop loss, and I usually have a take profit set. With long-term positions, I have a bigger stop loss, much wider stop loss, like here on EuroCAD, and the take profit is not set. I'm using a trailing stop loss to get out of positions. Now, if the fundamentals change, if the story changes, if the euro becomes weak, I may manually close this trade. All of the updates will be, of course, in the A1 Discord. So far, it has not been working out. It may be wise for me to cut my losses. I will consider that. I will think about it. But so far, I don't have a concrete fundamental reason to close this trade. Okay. So I need a clear fundamental reason to close out of a position manually. Currently, I don't have it. So free trades. My watch list consists of the NASDAQ, gold, silver, and of course my free positions. NASDAQ is absolutely flying higher. If anyone is wondering about my DNA funded challenge, well, here it is. So this is ChatGPT giving out trade signals to me, and currently it's actually in profit, which is pretty cool. So currently the equity is 52,871. That is pretty nice. That is pretty healthy. I am 4% away from the profit target, I believe, for phase one. So pretty nice. I will keep you updated. And also, if you guys, not if you are looking for, but I'm actually going to do a giveaway. So for the next 5 days, I will be doing a DNA funded challenge giveaway. I believe it is the 25K account size. Let me just check. I know that Emily sent me the information. So let me see. 25K one phase accounts. And today I'm giving out the first one. Okay. So I'll give you a code. You just put in the code on the website and you get a free account. So by the end of the stream, I will pick someone in the comments. Okay, we can do that. I think we can do that. So for this giveaway, I haven't really thought it through, but what I think we will do is I will pick someone from the comments, and then that someone will give me their email, and then we will do, I will send the code to the email, okay? So, yeah, or what we can do is first person to claim the code gets it. Okay, yeah, so let's do that. That's the game plan. So let's just continue now with the analysis. Keep watching the stream, and in maybe 5 or 10 minutes, I will drop the code. I was talking about the NASDAQ. It is currently flying, working pretty well for my challenge, ChatGPT challenge, because this thing, or ChatGPT, just wants to buy the S&P, which is a pretty good decision, if I'm not going to lie. Actually, the last trade is a sell on the S&P, but it has been working out, currently in profit. Mostly it has been buying the S&P. So during this period, it was massively successful. And then we had this range bound period where we had pretty much a break-even result right there. See, break-even mostly. And now we're back to a trending market condition. I was too slow. I didn't catch the dip. I didn't catch the taco trade. I know Nick did. So it was an awesome trade, awesome position, and something for me to work on. This was the taco trade. This was the dip. If you're not aware, Trump always chickens out. So Trump goes out, crazy announcement, crazy tweet, market drops. You buy the dip. Couple of days later, Trump walks back on his word, and the market rebounds to the previous levels. Okay, that is how it goes. So unfortunately, I was a bit too slow. I'm looking for the next taco trade, if I'm being honest. There's going to be more of them for sure. He's not going to stop. They won't work out forever. The markets will eventually learn to sort of ignore what Trump is saying. But so far, they have been working flawlessly. I think the win rate is like 90% or something crazy. Chris Pulver has the information. I think he's going to talk about it more on the big stream that we have. I think it's on the 17th of November. So I saw Chris's presentation. It's absolutely awesome. And I think he will talk about the taco trade. So if you want to join, there should be a link somewhere in the description, or check out the A1 Trading website. It is a free webinar that we are doing at A1 for you guys. So make sure to check it out. I think maybe James or Nick, whoever is monitoring the stream, can drop the link in the chat. So I'll be doing a presentation. Chris will be doing a presentation. Nick is doing a presentation, and James as well. It's gonna be great. Back to the charts. What is my current game plan? Well, I am looking for dips. I don't want to buy these highs. I think currently the price is, well, I can say overextended, but I've been saying overextended for 4 months now. So it looks pretty crazy to say overextended. So I would say It's not overextended. I just don't want to buy right there. I want to buy close to here. I want to get a big red candle, okay, like this, or sorry, like this one, and then to buy the dip, to buy right there, let's say, or right here. So that's the game plan. Next one is gold and silver. So gold and silver. If you joined my last stream on A1, you would have remembered I was talking about Elliott waves, which is, I know, sounds pretty crazy, but I was talking about Elliott waves. I was talking about having an ABC pullback. And what I mentioned is this was just the first leg of the pullback. Usually big pullbacks after a huge rally, they come in 3 waves. First one, second one, third one. A, B, C. Yeah, so A, B, C. Waves up are 1, 2. So waves 1, 2, 3, 4, 5, and then the dip is A, B, C. I mentioned that we're going to get another push lower. We actually got it. Now we have that sort of ABC pullback. What I'm now personally looking for is I'm looking for an extra confirmation, which I also did mention. I'm looking for the edge finder to print a top setups, gold, a bullish reading. Okay, so I'm looking for a bullish reading print on gold and on silver. I actually like these levels, if I'm being honest. So I think we had the dip. I think if we get more downside, it can happen, but we already had a quite nice correction. I just need the environment, the fundamental environment, to be in line with a bullish gold, a bullish silver. What would be perfect, as I mentioned, is a bullish reading from the edge finder top setups. I think Nick is waiting for absolutely the same thing. So he wants to buy the dip. He wants to get in on a discount, get in while it's cheap, because it's not going to stay here forever. If you zoom out a little bit, you get a pretty good idea of what is the general direction of gold and silver. So I actually like the current levels. I think we got that correction. I think we got the ABC that we needed. And now let's wait for the top setups signal, okay? And I think it's time for me to release the code for the free 25K one-phase DNA challenge. Let me just copy it from my documents. So let's go back to here. This is it. Okay, so this is the code for the first 25K DNA funded challenge. Whoever is the fastest gets the challenge. We're gonna do it like that. I have a couple more giveaways lined up for the next few days of my stream segments, basically. So this is the code. You can't really copy and paste it, but you can see it on the screen. Okay, so I'm gonna leave it on. Okay, let me just check the comments. And let me know in the comments whoever caught the code. So if you managed to input the code and if it worked, let me know in the comments if you caught it. So I'm wondering who will be the fastest. I think Sluggy. I've been talking to Sluggy, and he actually managed to catch a code on a stream. So yeah, first come, first serve. Free 25K one phase DNA funded challenge. I think you guys copied the code, so we can continue with the regularly scheduled program. That's about it for my personal watch list. I'll be honest, in the last 2 days, I haven't been 100% active with the developments. I have been watching the news and watching generally what is happening, but I haven't developed any new trade ideas, so I don't have anything new on my watch list. For now, I'm just monitoring my free positions. And again, I'm looking for a taco trade on the NASDAQ. Gold, I want to see a bullish reading. Silver, I want to see a bullish reading as well. I actually like these levels. So let me see. Okay, so looks like the code is used. Let me see. Code has been claimed. Awesome. Whoever claimed the code, if you can put it in the comment section. If there's absolutely any issues, you can contact support at A1, or you can contact me in the A1 Trading Discord and we will resolve any issues. There shouldn't be any issues, but we are here if you need any help. So yeah, people are pretty fast. You need to be fast, but I have more codes for the next couple of streams. I will be streaming tomorrow. You can find me, you can find my schedule here. Go to A1 live stream schedule on the A1 Trading website. So tomorrow I will be on at 9 a.m. Eastern Standard Time. Next week I'll be streaming every single day, so make sure to tune in. Now let me get some requests. Let me see what you guys want to see, what you guys want me to analyze. Aussie dollar, sure, we can do Aussie dollar. That's a good currency pair. So let's see. AUD USD. Now, for the Aussie, I was bullish on the Aussie. Now I have a bit of a mixed opinion. Let's browse through the Edge Finder. Let's see what Edge Finder says about the short-term analysis. Actually, currently bullish. 62.5% of the data is coming out better than expected. That is good. Long term, I think the Aussie is doing okay. I think Australia is doing okay relative to some other economies. I'm talking about the UK. I'm talking about Canada. My main problem with Aussie dollar is I'm bullish on the Aussie and I'm bullish on the dollar, right? So I like the Aussie. I like the dollar. That creates a flat range. Okay. So that usually means we get a flat range because you need polarity. You need one currency to be strong. You need the second currency to be weak, or vice versa. If both currencies are strong or both currencies are weak, that means you will have a flat range. That means there will be no trend. Okay? That means this happens. Now, I'm a trend trader. I don't have an edge in a range-bound market. I know there are strategies for a range-bound market, but I don't have one. I'm looking for a trend. So much better, in my personal opinion, to focus on one pair that is strong and one pair that is clearly fundamentally weak. It's very easy, right? You go to the Edge Finder and you pick a pair. If you're looking at only the short term, for example, Swiss is pretty weak, and let's say the euro is strong, right? So euro Swiss, that may be a good position. Let me actually check the euro Swiss. What is the euro Swiss doing? Okay, this was just something I had an idea about. So it's actually going up. Euro Swiss is actually going up. Interesting. Getting back to the Aussie dollar, I think it's a bit too flat. I think it's a bit too range bound. I think it looks corrective. Okay, I don't see a clear trend. A much better opportunity, in my opinion, is UJ. Clear uptrend, clearly above the 20 MA, clearly pushing higher. USD CAD, also, in my opinion, in an uptrend. Euro CAD, definitely overall in an uptrend. That's where I have an edge. That's where I have a definite edge. So there's a clear difference in the market condition between Euro CAD and Aussie dollar. See? Euro dollar. Euro dollar is another one that is pretty popular, but it's flat. Looks flat. Also, when I was away, I got a notification on Euro GBP that it actually broke out higher. I was actively looking for buy setups on Euro GBP. I will take a look at Euro GBP after Euro dollar. So Euro dollar is flat. And again, we have a problem. I like the euro. I like the dollar. Both currencies are bullish. That means there is not an opportunity for a trend, right? So both currencies are pretty much, let's say, fairly priced. The price here is fair. There's no appreciation. There's no depreciation. A more interesting pair to look at is Euro GBP. So Euro GBP, yes, it finally broke out. Nice, nice, nice. This is the one that I will be putting on my watch list. This may be a new trade idea. Again, I'm going to have to do more research. It's not just a straightforward execution of a buy setup. I need to dig in a bit more. I need to look at the fundamentals a bit more. Short-term, long-term news. I need to look at financial juice and consider a buy position. What I do like just in terms of technical analysis here is I like that we got a breakout. Finally it broke out. I was waiting for this for a long time. I also had a trade on. Yeah, so this was actually a winner. That was a signal in the A1 Discord, but I wish I held it a bit more. The problem with going long Euro GBP is negative swaps. It's a pretty expensive position to hold. Anyways, I like the I finally like that we got a breakout. We're above the 20 MA. Fundamentally, euro is pretty strong. The pound is pretty weak. I would say one of the weakest. So CAD is the weakest. Pound is the second one. If we look at the pound for the short term, and usually when I say these things, the strongest, the weakest, I'm talking about long-term data. But let's look at the short-term data. UK. Short-term data is actually bullish for the pound and for the euro, but long-term data is bullish for the euro, bearish for the pound. So I may place more of a long-term position. I'm talking about 1, 2, 3 months where I get in on a buy setup. A great idea, in my opinion, would be a retest of this level with a bit of a tighter stop loss, let's say. So this could be nice. This may be a nice idea. I do like that on the daily candle, on the daily chart, we actually closed above the highs and we continued. What didn't happen, we didn't just pierce and retrace with a huge wick. So this is a positive sign. I like the technical analysis. I like the general fundamentals. I just need to do some more research about fundamentals, and I need to see how I can structure this trade so that it makes sense in terms of the reward to risk. Also, I need to identify some potential resistance levels that may be a problem. I don't see any, maybe here, but that's pretty high. So looks okay. Now it is time for me to mention the sponsor of today's video. We already did a giveaway for DNA. Now let me just mention, if you guys want to get a funded challenge, okay, funded challenge, if you want to get extra capital, you can do so using my A1 discount code. Get 25% off any of DNA funded challenges. Code is A1 Live. So this is specifically for you guys watching the streams, 25% off. Now, why do I like the offer from DNA? First, they're using TradeLocker for execution. TradeLocker is awesome. It's the best software for execution that I have used. My favorite feature is you can actually automatically calculate the risk. So you don't have to do any outside calculations like I have to do for stupid MetaTrader. I have to waste my time going here on my FX book position size calculator. In TradeLocker, everything is built into it. So that's the first reason. Of course, not the most important one. The most important one is DNA Funded is a reliable prop firm ran by professionals. A lot of prop firms, 95% of them in the space, are ran by people that are 19 years old and don't know what the hell they're doing. So you need someone who is reliable and, let's say, a bit older, a bit more experienced to be running a prop firm, so that you can be sure that DNA will be here in the next couple of years. But why I like it the most is you get a good price. You get a great price for a good prop firm with A1 Live code. And yeah, this is my funded challenge. Actually, selling the S&P is working out. I don't know how it is working out, but so far it's been working out for ChatGPT. If you guys don't know, I'm doing a challenge where I take trading signals exclusively from ChatGPT with zero of my own input, and these are the current results. So currently it's up, I would say 6%, let's say, or 5.5%, something like that. Okay. Which website did you buy your car? I'm looking to buy a car as well and have it shipped to Portugal. It's Mobile.de. So it's a German, most popular German website for buying cars. Just be extremely careful. So make sure that the guy you're buying the car from is actually German, okay? And check the reviews. Make sure he has 4.9 or 5 stars, because there's so many shady scammers out there. So I would say only do business with a real German dealer who has extremely good reviews. You cannot risk losing, because it's a huge amount of money. So don't risk losing your money. Pay a bit higher price, but get a better car. Okay, so do we have any requests for sort of the last request? Let's see what is interesting to me. I'm gonna scroll through the chat. So, well, we can look at the DXY. We can look at the DXY for this last part. Okay, so we actually have a guest coming after me, so I'm gonna wrap it up. But you can catch me tomorrow. And last question: what car did you buy? Well, I'm from the Balkans, so I bought a used BMW. Of course, that's what we buy. That's what's in our blood, and hopefully it doesn't break down. So yeah, see you guys tomorrow. Goodbye.
Spooky season is here, and with it, we're doing a huge Halloween sale. Simply scan the QR code and you'll be connected to a real person on our support staff who can get you set up with a copy of the Edge Finder, our VIP memberships, the stock box, and more for 45% off. It's the biggest discount we do all year long, so do not miss your chance to pick up a copy of the Edge Finder at 45% off. And if you find QR codes too scary, then feel free to use the link in the description down below instead to explore our website or to speak directly to a member of our support team. Don't miss your chance to get some spooky savings on the Edge Finder and our other products, and happy Halloween.
Hello. How are you guys doing? Happy Thursday. I hope you all stayed safe last night. Markets moved kind of as expected, I suppose. Nothing overly crazy though. So not much going on my end. I'm in a Euro CAD short. I'm looking to build up a DCA position here. Basically just following the Edge Finder. Very, very simple, very small position. So I've got a 0.03, looking to basically just build into a couple of different short positions. I was looking really to see if we get it slightly higher towards sort of the 50% 618 retracement, which we didn't get. But there is still hope there. So I'm looking for us to come down, correct some of this left side, come back down into the lows at 1.603. But that's pretty much it. I'm still in my Brent position, Brent oil, not really doing anything. We had a little bit of a push yesterday when we got some inventory news, but overall, very flat and boring. But that's pretty much it. My trailing stop on pound yen got hit as well, so I'm out of that one. Not for a large gain. I got tapped out around halfway on this bullish candle here. But yeah, so that's that. So let's see. Am I buying a car, James, or a scooter? No, I'm not planning to buy anything really. I'm a bit frugal. You'll never catch me buying really much. If I do buy anything, it's normally to hold value somewhere. Why is the yen so weak? Well, capital flows, and we've also got the idea that obviously the path to normalization isn't going to go ahead until next year, whereas traders were kind of expecting it to start this year, and obviously we've got the new PM, which has kind of dampened that idea. So what we've got is obviously dollar bullishness off the back of Powell's hawkish cut. So what we basically had was Powell saying that there is no guarantee, no certainty of a cut in December. I'm sure you've all heard this from Nick already, so I'm not going to go into it too much, which has obviously led the dollar to have some upside. But what we've got to account for is just because the dollar's bullish, it doesn't mean that it's just the dollar. So what's affected when the dollar's bullish? Well, the euro takes a hit, the yen takes a hit, and that's again because there's capital flows. When we see investors wanting to be in a currency, they're going to allocate from other currencies. Does that make sense? So if you're in, I don't know, let's say you're a buyer of euro, but then you want to go over to dollars, you obviously got to sell those euros, move over to dollars. So that's obviously in a very nutshell explanation. That's kind of what we're seeing now. So dollar up, euro down, yen down as well. So I would expect the dollar to continue catching a bit of a bid. I'm not a huge bull or a huge bear right now. I think the words from Powell have helped bolster it. But again, as I've been saying for the last couple of weeks, we don't have that labor data. So I'm still finding it a little bit tricky on exactly how I want to position. So I think for now, I'm going to stick with the basics, just going long dollar, following the flow of the market. And basically just what the Fed or Powell has said on surface level. So I'm looking to be a seller of euro dollar, seller of pound dollar, maybe a seller of gold and silver at some point, but I'm not overly convinced on that one just yet. I think that's a bit too risky. I'd still quite like to be a buyer of both actually, but maybe at lower prices. I was a buyer of silver earlier last week, I think, but I closed it for a small loss because I thought it was a bit too early. So yeah, euro dollar. If we can get some sort of retracement from the Fed yesterday, obviously we had a big bearish candle on the back of that. So if we get where's the tool here, some sort of retracement, I'd be quite happy to go in for a short position with a stop just above the highs, looking for maybe 1.14 to get hits. So that would be around there. So I think that'd be quite a nice trade, just over a 1 to 2. So we'll see if we can get that one done. Other than that, there's not really too much on my radar. I think the Australian dollar, I think Marco covered it quite well, actually. I think the Australian dollar is doing okay. I think the pound is in a very, very bad place in terms of its fundamentals. And the overall situation in the UK is pretty dismal. Canadian dollar's rough because we've just had a rate cut of 25 basis points, but it's not... So what we've got to account for with currencies, and this is where the edge finder really comes in useful, because it doesn't just account for what the current data is, it accounts for the shock of the data as well. So what we've got to think about is, although yes, Canada is weak, is it priced in? You know, is it new news? No, it's not. Well, everyone knows that the Canadian dollar is weak. It's been priced in pretty much fully. So what are we looking at going forwards? So that's why I'm quite happy to go long Canadian dollar for the short term. I'm not investing in Canadian dollars by any means. But yeah, I'm just looking for some continued downside. How do you feel about this year of trading, generally speaking? FX wise, for me, it's been pretty poor, I'll be honest. Earlier this year, when the dollar was really taking a hit, sort of the first 2 quarters of 2025, it took me down with it. I think I've spoken about this before. I ended up hitting about 8% negative on the FX portfolio. Managed to claw it back, but now I'm sitting pretty much break even. My FX this year has been pretty dismal. However, on the other side, my stock portfolio has done absolutely phenomenally. I was heavily investing when we had the tariff crash. So I'm up, actually slightly down now, but it was up. Oh, sorry, it's currently up around 98%. It was about 120% a couple of weeks ago. So I'm completely like satisfied with my overall performance. But yeah, FX specifically, I found very difficult this year. How do you do the spin? I'm going to be sad if you didn't. Did I do the spin? What do you mean, did I do the spin? I've got no idea what you're talking about. I'm just thinking, is there anything else to go over? So crude is bullish, but I don't see an entry for crude. So I'd quite happily take a long crude and stay in short Brent. I think that'd be quite a nice way to just hedge off the risk and let the winner run. So let's have a quick look. So I suppose we did come I only recently added the 0.382 to the fib. I don't really, in fact, I've never used it before, but I thought may as well just add it and see how the market does react around that level. Because I always just use 0.5, 0.618. So I'm just experimenting with it at the minute. But I think where oil is now could potentially be a pretty good level. So we've obviously got the previous low here, all the way down to around the 618. This zone here could be a reasonable place to look to start building up some long positions. But to be honest with you, it's very tricky because although the edge finder is bullish and the edge finder is very, very good, I just don't know if I want to buy into this. This to me is very scary. Because oil just had a very, very bad time. Do I want to start buying it now? Am I going to be the guy saying that oil's bottomed out? I don't know. I don't know if I want to be that guy. I don't think I know enough about oil to be buying it in an aggressive downtrend. The slow chair spin. I didn't do the slow chair spin. No, I forgot about that. Gold. Yeah, we can go for gold. We can check dollar Swiss as well. Could be a good long. Absolutely. Yep. Let's take a look-see. Let's get rid of all that. So we'll do this and we'll then we'll move on to gold. So as I said, yes, Canadian dollar is not in a great place, but again, I'm willing to say that it's priced in. There's nothing new going on with Canada. So it's not like we're going to see dollar kind of rally to the upside just because of weak Canadian dollar, or vice versa. But I think what we could do is if we start seeing positive developments from the US, and when I say positive, I mean positive for appreciation of dollar, not necessarily positive for the economy. So things like higher inflation, if we could see the governments reopen, we could get better labor data, then yes, maybe we could get dollar Swiss longs get to run. I think that would be quite nice. But again, right now, it's just sideways. There's no trend here for me, and there isn't enough going on within dollar CAD. Dollar Swiss. Wait, was I talking about Canada? My bad. I meant to talk about Swiss. I was getting confused. I don't think there's enough going on in either side really to warrant massive upside just yet. That could come, but right now I think it might just be a little bit early. So gold here. Let's just add these. So I think gold could be quite a good short. Now we discussed this yesterday, I think it was, and what's concerning to me is we've obviously had a very, very aggressive run. We've obviously got the 9 weekly candle pattern here. My drawings have disappeared, which is a bit unfortunate. But we could expect, maybe 13% downside roughly going forwards, just based on the average historical behavior. But again, what the issue is that I'm seeing here is we've got the 50 and 100 daily moving average about to cross. We've bounced off the 200, however, not in a meaningful way. So this is sort of the first point of contact that I would have expected gold bulls to really step in. This would have been sort of the place, if you were a buyer, to start looking for, a reasonable retracement and then continue higher, very, very basic pullback. However, the fact we've not got that and we've seen buyers continue to fail to hold higher prices, to me, does suggest that we are coming lower. We've also got a lot of left side still that we could see corrected. So we could end up coming all the way back down towards 34,000, and that would just come and meet these previous all-time highs and be a very, very, a very big break and retest. But yeah, I mean, gold's tricky. I think being a seller of gold, to be honest, does make a bit more sense right now. Again, especially with the hawkish comments from Powell, dollar seems to be doing quite well for itself, and I think it's a very, very saturated market, if you will. I still think there is sort of a cooling off period that needs to happen, which we are in the middle of. So I don't think it's over. I'd be quite happy to say gold can continue lower, but again, it's one of those things like, we could get to next week and it could continue rallying again. It's a little bit of a tricky market to be a bear on right now. Pound Swiss, there is nothing to say on Pound Swiss. It's basically just a free sell market, really. So I was a buyer of pound Swiss, I think it was 1 or 2 weeks ago now, trying to see if I could benefit from the carry trade idea. So obviously the Swiss National Bank has an interest rate of 0, and the Bank of England, I think it's at 4% at the minute. I'm not sure actually off the top of my head. I think it's around 4%. Could be slightly lower. Either way, the swaps to be a buyer on pound Swiss are very, very good. You get paid very nicely. So I was seeing if we could benefit from basically a carry trade dynamic, which just didn't happen. So, I mean, what can you really say about this? Every push is met by more downside. Every single move higher is met by further downside. So I think the most sensible way to trade this market, to be quite honest, is just selling any run towards the 200 moving average. But again, what you've got to account for is the swaps, because you are going to be paying pretty hefty fees to hold short positions on pound Swiss. So it might not be worth it, depending on sort of your time horizon, your capital and things. But for me, pound Swiss is not, it's not an attractive market really either way. Again, I do like that carry dynamic to be a buyer, but clearly that's not playing out. Please check pound CAD. Please check euro yen. Okay, hold on. I want to test something. I'm going to buy USD Try on a cent account because cent accounts don't have swaps or commissions. USD Try seems like the S&P of Forex. Yeah, have fun. Okay, let me know how that goes. Okay, so there seems to be some demand for euro yen. I think the most sensible option is to be a buyer of euro yen. The ECB is pretty neutral. I don't think they're really leaning either way. You know, I think they just left their rates unchanged. So we've got that. And again, we do have sort of the same idea with the Bank of Japan, but the Bank of Japan's not in an optimistic sort of holding way. The Bank of Japan's more of a, oh dear, the holding rate's not hiking. So I think we could probably get quite a nice long position, actually. I might look to take a long. The thing is, and I've been quite vocal about this, is just my concern of an intervention. So the MOF, which is the Ministry of Finance, and they are the people that conduct the interventions in the yen. When dollar yen is above 150, which it is now, it's currently at 154. If we continue higher, or the higher we go, the risk of that intervention just increases, and then it will happen, and there is nothing we can do. Absolutely nothing. So that's the biggest concern with the yen for me right now. So although I think, yes, on paper, fundamentally, upside makes a lot of sense and buying makes a lot of sense, I'm just cautious. It just gives me a bit of heebie-jeebies. So I think if you were to be a buyer, it'd be a case of just trailing stops maybe quite aggressively, or just using very, very low risk that you can afford to lose within a couple of seconds if we do get an intervention. Oil is flying. That's not what I want to hear. Yeah, it is doing quite well, actually, isn't it? Seems like my Brent position's not going to be, maybe not going to be fruitful. USD CHF. We've just done dollar Swiss, my friend. I've not seen that gas. No, let's have a look. Let's do the daily. Yeah, so it looks quite nice actually right now. This gap's a little bit of a concern. I mean, I'm not sure I'd want to buy with this gap right here, but if we get these EMAs to start crossing bullish, maybe something like that could make sense for me to finally be a buyer. But right now, there still just isn't enough there. And again, I've already said I might be missing the move, but I'm willing to take that chance. Yeah, we are getting close to the intervention levels, exactly. So 150 is sort of the uncomfortable level for the MOF. 155, 160, that's where it becomes, in my opinion anyway, very high risk to be a buyer. So yeah, I would be taking caution. The Swiss is one of the hardest currencies to go against for some reason. It's just a very, very stable currency. It's always the go-to in safe haven demand. Even outside of safe haven demand or risk on, it's still stable. So yeah, it's tricky. It's quite good as a proxy currency as well, though. So if you want to go long or short on something that is extreme, so let's say you've got a very strong dollar or a very weak dollar. Dollar Swiss is normally quite a good core currency to go basically just take advantage of your dollar bias. Because yes, the Swiss is stable, but if there's another currency that's doing exceptionally well or exceptionally worse, you can often benefit quite nicely from that. Swiss yen shorts, no, not in my book right now. Again, as we've already discussed, the Swiss is quite stable. The yen, in my opinion, is pretty weak, so I wouldn't be looking to be doing anything really with Swiss yen specifically. I mean, look at the trend. Let's put it on the weekly, actually. Like, look at this. And again, just bear in mind, this is a weekly time frame, and it's a currency pair. And currency pairs are sort of not meant to mean revert, but that's kind of like the tendency that we should expect or could expect from currencies. This has been almost an 80% rise since September 2019. Selling it requires sort of everything to align. And those of you that have been watching the stream, specifically my segments since sort of the start of this year, will know that I was very heavily leaning towards shorts. Sort of, when was it? Sort of around here. So I was selling this move right here, pretty much, roughly. Now, I want to say it went wrong. It did go wrong, but it wasn't like a big loss. It was more just the market completely disagreed, and it, you can see what happened after. So I was really on the wrong side of that. So I'm taking extra precaution on Swiss yen in terms of what I am saying, because yeah, last time wasn't fun. So I honestly think unless we get something to really drive this market lower, whether it be aggressive hiking by the Bank of Japan, maybe even further cutting from the Swiss National Bank into negative rates, if we get both of those things, that could turn this market then into a negative swap, meaning we get, well, actually it is already negative swaps, but negative swaps even further to make it more beneficial for short sellers to get into the market, maybe. But yeah, I don't think it's worth talking about being a seller right now. I think easiest way is just buy Swiss yen. Can you explain what the benefit of such a safe haven currency is used for? Like, why park money as Swiss? Because, oh wait, hold on, sorry, 1 second. Because it's just one of those things. Like, why do people go to gold? Why do people go to the yen? Same thing with the dollar. It's just kind of how it goes. I know it's not a super detailed answer. Sorry, I'm just reading something. Okay, sorry, what? My bad. That was really unprofessional. I just had an emergency message I needed to read. Big size is your enemy? Well, yeah and no. Big size is not necessarily your enemy. Big size on a unreasonable trade is the enemy. Because what you've got to account for is there's sort of two types of traders, really. There's consistent traders, and a consistent trader is mainly what retail traders are, which is where, you might risk 1% to make 2%, and you just do that over and over and over, and you end the year maybe 20-30% up if you're good. Whereas there are some other traders where a lot of their returns are basically generated from just a handful of trades throughout the year. So they might take, I don't know, let's say 12 trades a year, which is obviously one a month on average. But those 12 trades might be slightly higher risks than what we would normally do. A couple of them might fail, and the rest of them will basically just be larger positions left to run, and they will close out. And that's kind of what they do. But yeah, I mean, as a general blanket statement, big size is definitely not the way to go, especially for an average trader. My sort of max allocation on a trade would be 3 to 4%, and that's if I'm absolutely convinced on something. It's already in profit. I'm looking to scale in. My stop's already at break even on the initial positions, and it's just one of those trades where it's essentially free money. That happens very rarely. That's like what do you call it? Like is it a golden goose or whatever that word is? It's a golden goose type of trade. I saw something about the S&P potentially weakening the Swiss if it gets to. Yeah, I read that as well in a report. I think it was JP Morgan that said that as well. Where is Euro Swiss actually? Let's just take a look. What's the price at currently? 92. So yeah, we're actually almost there. So that could happen, but we will see. So Euro Swiss is the benchmark for this one. So as the MOF use dollar yen as their sort of reference point, S&B will look at Euro Swiss. So 0.92 is where we start getting into the danger zone there. If you're in a trade and you are in consistent tension and mind swing as of checking the chart all the time, you are in big size. That's your status period. Yeah. What's your take on DAX and NASDAQ? I think DAX, I'm not too sure, to be honest. I have stopped paying attention to the DAX as frequently as I used to. So I can't give you that much. Currently, it's just sideways. I don't have anything, even on price action where there's nothing there for me. NASDAQ, we spoke about NASDAQ yesterday. So I'm looking for two things here. Either we get this gap fill, come and meet the 100 daily moving average, and it'd be something maybe just very simple like this. So break and well, actually, it's not a retest, is it? But a reasonable pullback. Or we get the break and retest on the previous highs here. So we retest lows, get in long, and that would also be a very valid trade in my opinion. However, it might be the time that we might see stocks start cooling off a little bit. So we've had an incredible run. We obviously had the 20% downside, and now we've gone and appreciated over 60% and created new all-time highs frequently. Now we've just had Powell say that we might not get a rate cut in December. And if we don't get that rate cut in December, then likely that sort of rate cutting cycle that we kind of anticipated all year is done already. So that might be a factor to drive the indices and equities markets down slightly lower, give some breathing room, cool off a little bit and see something a bit more like this towards sort of these daily moving averages down here. So that's something I'm a bit cautious of, but to keep it simple, we do have the Edge Finder giving us a nice bullish reading on the NASDAQ of a score of 7, so that's quite nice. Am I doing account management? No, I'm not. Material, MP material reported 19.9 million revenue. Okay. Do you still trade SRS and DAX? Yes and no. I do still trade it, but not very frequently. I'm actually currently trying to build a more statistical model using a VWAP as well. So I'm trying to combine VWAP and breakout into one thing. So I'm currently using Edgeful and is it FX Replay or something? I'm currently doing a bit of a deep dive on data. I mean, it's painful. I hate doing it. I hate it. I'm forcing myself to go through data and do all that stuff, but it's not me. This is why I love trading fundamentals, because I can kind of just not do anything. Does that make sense? I can just look at some reports, look at the Edge Finder. I can just, gather a bit of data, put it into a Notion document and leave it, and then just set my alerts or pending order or whatever it may be and wait. Whereas with technical models, specifically like statistical models, the amount of work and time it takes, it's just so tedious to try and do all that stuff. It's not for me. I don't enjoy doing that type of stuff. So it's fun. Although I do have a video coming out about the VWAP actually in about half an hour. You love FX Replay. I know Nick works with a backtesting company. I can't remember the name though. But yeah, if you are into backtesting, I'll go and check out Nick's videos on it. Can you do a little analysis on Australian dollar, US dollar? Yeah, sure. So my idea kind of is the same as euro dollar. I'm still slightly cautious on the dollar because we're sort of again back in this zone of, are sellers going to take over, or are the bulls finally going to break out? Because I'm looking at the weekly time frame here on the dollar, and this is really, really convincing to me that the dollar can come higher, can start running higher. However, we do have what is objectively a downtrend, obviously with the moving averages on the weekly. And again, the daily here is coming into the 200 moving average, which is a dynamic resistance. Then we start going into lower time frames where we've consistently seen the dollar reject sort of 99 to 100. So I am, cautious, but slightly bullish on the dollar. Does that make sense? So things like euro dollar, pound dollar, Australian dollar, I would be happy to go short, mainly off what we heard from the Fed yesterday. So maybe if we could see some sort of 50% retracement, then a short position will be quite valid. But as we stand right now, I don't see any type of entry. But overall, I've got quite a short bias here. So I think on the schedule, it says that Marco's on after me, but Marco's on before me. So I'm assuming it's Miko. So it might be Miko coming to take over the show after me, but I'm not 100% sure. But my time is up, ladies and gentlemen. So I'm not going to be here tomorrow. I'm going traveling. So I'll see you guys next week. I hope you have a great weekend. Enjoy the rest of your days. Stay safe. Don't get margin called. And thank you for having me.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.